Going live for a mic check. Let me know if you can hear me now and if the levels are good. Going live for a mic check. Let me know if you can hear me now and if the levels are good. Testing, testing. Audio check. Testing, testing. Audio check. Oh my God. I'm going to have to trim this out, but are you telling me that Sherm is posting emojis in the chat for the quarterly review too? Unbelievable. Okay, welcome everybody to the 2020 Q4 SC Prime quarterly review. Today is going to be a little different than previous ones in that we're going to have at least one guest I can see, and hopefully we're going to have two guests today, but the call will stretch a little bit longer. Normally these take about an hour, as you are aware, hopefully, and this one may stretch just a little bit longer to accommodate our guests. And what we're probably going to do going forward is we're going to start doing more of this kind of stuff outside of the quarterly reviews with people that are associated with the project. In the case today, we're bringing on a storage provider, cross your fingers, I hope, and also one of our project stakeholders, so who's also a storage provider. So we really want to get into the process of introducing people to the world and explaining how they're participating and what they're bringing to the project. So this will be a dry run for that process. So without further ado, which is a phrase that I said to myself I would never ever use again, but continue to use every time, we will move forward. And of course, this is the slide that we show every time on these calls. And I just want to continue to talk about this because I think it's really critical to everything that we're doing. And it's really important to really make sure that project stakeholders, backers, potential customers, everybody really understands what it is we're trying to achieve and where we believe we are. We're not really going after any specific company that's in the market. We're not trying to sort of outcompete anybody. What we see is we see a coming data deluge, and most of it going to the public cloud. And so what happens is that we're right there at the beginning of the hockey stick upsurge, and we believe we're going to be bringing a superior data center profile to the table to accommodate a lot of that data. And the things that we hope to bring to the table are cost superiority, some cost containment, some cost certainty, and we also expect to bring performance that rivals or actually bests some of the stuff that's out there today. So this chart really informs that, and if we do a good job of what we expect to do, then we will get our share of that giant hockey stick that's coming. So once again, there's your slide that you see every time. Okay, let's jump right into our fourth quarter review. And this call is going to be interesting because we're going to talk a little bit about the fourth quarter, obviously, but there will be a lot of shading, foreshadowing into the future stuff that's coming based on what we did in the fourth quarter. The fourth quarter, I would have to say, we've been around now for about 2 years and a quarter, and I would have to say this was the most important and most relevant and most productive and most interesting quarter probably since we started the project. And I suspect it's going to get that way going forward, and I think we'll probably see even more interesting quarters as we go forward. What really happened that was most interesting was this small little architectural design shim application that was proposed and ultimately put forth as a solution to a specific problem called host.io. And I'll just sort of read it back the way it was originally presented in our stand-up meetings, in that the senior dev who proposed it put it out there for a specific problem and said, I'll probably take this one myself because I can code it up in about 2 days. Perhaps even maybe take me another day into the weekend, but I'll have it knocked out by the end of this week. And that's not exactly what happened, but actually what did happen was much better than that. It was much more productive and much more future oriented. So the host.io module is going to take up a lot of this call. That leads into relayer development and beta testing, and then ultimately the MVP release. Also in Q4, we really got our telemetrics initiative off the ground, so that's going to be interesting. We'll talk a little bit about that. At block 109,000, we had a hard fork, and hard forks are always high wire acts, and this one, of course, was no different. And as much as we tried, We still ended up having a chain split out of it. And the good news, I guess, is that even though we have these things occur from time to time, they really don't, at least in this case, they didn't cause much disruption at all, and we were able to move forward. There was actually a benefit that came from the chain split. I'll talk about that a little bit later. But at the end of the day, we had a hard fork, and we'll talk about why we had a hard fork later as well. We've got some straggler addition to our investment profile in the last month, and I actually had some in quarter four as well. The round is now officially closed and no longer available for subscription, so we'll chat a little bit about that as well. So those are your main things. Okay, so let's dive right into this host.io thing, since the buildup that I gave it was probably way more than it deserves. But so with host.io, what ended up happening was we started last fall, late summer, early fall, doing some initial S3 work on our relayer stack that we had built. And we were all really tickled because the product actually worked. I mean, we had Commvault, which is one of the top 3 backup and recovery storage partners, working. Jay, our IT lead, actually had done a really nice video showing a backup of a VM, I think, and then ultimately a recovery. And, we were all just very much, wow, this is going to work, and the roadmap really looks clean, and we should be able to get to product release early in 2021, and let's go team. That's not really what happened. What ended up happening is, as we started going forward with testing, we started running into these locks, and these file locks were essentially stopping the relayer dead in its tracks. And they would come as we started to throw more and more data in larger files at the relayer and at the network. And so we scratched our heads. We finally figured out that it was related to pseudofs, which is a core module or a piece of coding that's in the base layer servlet. And the deal was we had to make a decision. And the decision was very simple. Do we go ahead and code around this and clean it up, or do we just throw it out and start over and do our own thing? And we've come to this place now several times in the project, and pretty much it's becoming the norm now. When we run into those, we just know the better strategy is just to throw out the code, start over, do what we know needs to be done. And what ultimately it's leading to is it's going to lead to a place where we have very little resemblance and very little technology deep in our core from the original project. And that's good. And in fact, if I had it to do all over again, if we could go back in time and with hindsight, we might not have forked another project. We might have considered starting from scratch. But there still is some base software layers that are in there and some stuff that may stay there forever. But the good news is that we're really developing most of our own stack now and our private IP. What host.io then ended up becoming was a real central controller of all of our network interaction. In the old terminology, you would say it was the host renter software application that controlled interaction with the network. And in our case, it actually controls a few additional things. We'll talk a little bit about that here as I go through this. So one of the biggest things that host.io does for us, it solves a number of problems. It solves a number of long-standing problems, by the way, both on our project and on the other project. But one of the things that was always an issue is how do you deal with tiny files? How do you deal with middle-sized files? How do you deal with large-sized files? Because what we have is we have a 4 meg segment that's out on the network hard drives. And currently, if you just went flat with SPD and uploaded some files, what ends up happening is if you have, under 1 meg, you're still going to use up a 4 meg segment. If you have, 100 bytes, it's still going to use a 4 meg segment. So it's not really efficient in a lot of ways. And there are a number of ways to sort of tackle this problem. This problem's somewhat known as the knapsack problem, in that what happens is you have a certain amount of stuff that you have to cram into very specific size luggage, in our case, these 4 meg segments. And, how do you do that? Well, the relayer gives us the ability to do some interesting stuff by acting as this front end to the network. And it's host.io that's really providing us with this capability now. And so the problem of small files has been tackled by us. So with what we're calling tiny files, less than 100 bytes, these actually are not getting uploaded to the network. These are going into a Postgres database implementation on the relayer. And I'm going to talk a little bit about the relayer itself, and is it quote unquote centralized or decentralized and blah, blah, blah. But for now, the relayer essentially has this Postgres database implementation inside of it, and host.io will upload tiny files directly into the database, and that's where they end up living. Medium files, smaller than 4 megabyte, what happens with those is that they get cached and held, and then ultimately, as they progress to create enough to fill a segment, then what happens is they get batched together, and then ultimately sharded, encrypted, and then sent off to the network. So that's really a big step forward, and it really provides for a lot of efficiencies. It means that when we pay to use sectors on our segments on the network, we're paying to use exactly what we're storing in terms of data. We're not doing it inefficiently and paying for a lot of blank space. And then, of course, large files bigger than 4 megs are just automatically sharded, encrypted, and uploaded. So really, really important part of this thing. And what it does is, by caching and buffering all of the data first before sending it out to the network, it provides for a really performant user experience. In other words, the users aren't sitting around waiting, watching, the network accept this information. Now, there is an area there that is still an issue and can raise its head even in the world that we've created with host.io and the relayer. And that's this idea of the asynchronous contracts, where contract locking stops all network activity until the contract is revised and changed, and then the next sequential thing can take place. We expect to solve that through our own tokening process. We'll talk about that in the next couple of slides, but that problem still exists, but it isn't right now causing issues, because host.io and the caching and buffering essentially work around that. If we were at scale right now, it would be a real problem for us. So in other words, we can't actually release the product until we get past that next step, but we're about halfway there. So okay, this is just a diagram to kind of highlight our overall architecture. So the relayer includes host.io. Host.io is a module inside the relayer. And as you can see, there are a number of other modules. I'm not going to go too deep into this diagram, but I did want to share this IP because I think it's really helpful to understand what it is we're building and sort of why. So, we have the end user machines, which are going to be running S3 clients, Commvault, VM, Rubrik, Acronis, you name it. There's thousands and thousands out there, but they're 80-20 type situation. There's a few that pretty much everybody uses. Inside the relayer, we have a Minio implementation to provide us with all of the S3 API calls to create our gateway. Then, as we said, we stream into a database, a Postgres database. Cost log is actually the module that kind of keeps track of all of the coin auditing and the coin accounting and so forth, that will allow us then to do billing, customer billing, and to ensure that people are able to use exactly the amount of data uploads and revisions that they paid for. And then if they need to do more, then ultimately, we bill them for it. And then that's where host.io shows up at that point, because that's how stuff then is ready then to be sent off to the network. And Muse is actually the contract server, and that is one of those applications that we're still using from the original software team and so forth. We've done a number of our own changes to it, Look, I'm going to say this. I've reached out through intermediaries that to suggest that there's benefits to us, still working with the old team. Obviously, the old team leader and myself are sort of oil and vinegar or whatever the combination you want to say, but that doesn't mean that we can't do productive things together. And I've stretched out the hand to do that. I don't think that there's going to be a return on that, but by the same token, I will continue to say it because at the end of the day, I think it benefits everybody. So we do still have a few of those components, and Muse is one of those. Muse is a contract server, by the way. The relayer itself is really interesting. So, when we talk about this whole stuff, we've kind of made it clear that we're trying to do sort of a blended strategy in decentralization. We're not all about quote unquote changing the world. We're not, trying to save PewDiePie from being deplatformed from YouTube or, Parler from being deplatformed from AWS. Frankly, none of that stuff is interesting to us. There are people that are working those problems, and I take my hat off to them. And certainly, we're headed towards a world where permissionless decentralization is definitely going to be the ruling sort of strategy for tech. But we're not there yet, and we're quite a ways away from there yet. And there are still thousands and thousands of enterprises that need to back up data on the network and upload data. And when I showed that chart at the beginning, it's very clear that those people are not really concerned about being deplatformed. What they're concerned about is costs and cost certainty, and they're worried about performance. And so we can solve those problems. However, we're also building a platform that's going to be able to evolve into that decentralized world. The Relayer instance will start out hosted on our servers. Currently, right now, we're hosting 3 or 4 instances, I think, right now of Relayers. Every single enterprise customer will get their own Relayer. To begin with, the Relayer hosted on our servers later on can be hosted in the cloud, perhaps on a AWS EC2 instance or somewhere down the road, perhaps even in our cloud. And then local instances will likely become the thing. And the local instances can be software instances that are spun up by IT personnel on their end. And the other thing we might do is we might make something like Cloudian does right now, where we build like a 4U rack box, and that box is a combination of a relayer, caching server, and ultimately it holds a lot of data before uploading it to the network, because what happens with a lot of this data, the first period of time after it's uploaded, it's hot and often is needed to be accessed. So having some sort of a rig that we can sell to the customer to just plug into a data center is probably very attractive. That also leads us to potentially being able to do some of the snowball type gear. It's a little tricky for us to talk about snowball, because what ends up happening, and what snowball is essentially, the cloud company sends some piece of hardware out to the customer site. The customer then, over a high, very fast bandwidth, like a 10G or whatever type network connection, uploads a ton of data to the device, and then the device is like FedEx back to a facility where it's then uploaded onto the network, at speed. And of course, in our case, that's not exactly possible. We can go ahead and send the device out to them to upload all the data, but when it comes back to us, it still has to get sharded, encrypted, and then uploaded out to the distributed data center. So somebody's going to eat the bandwidth. That said, I think there are going to be some ways that we can really mitigate bandwidth costs, and there are some things we can do to put those devices closer to the ultimate end storage units that are going to be hosting the data. For instance, if we do a CDN type profile or whatever. So there are some potentials for us to do snowball type stuff. And this is really important, by the way, because what happens when you go out and you tackle enterprise, when you really start getting into the bigger accounts, the data amounts are just crazy large. And if they're sending them all over across, standard internet connections, it takes forever. So you need some form fashion to be able to get those things onto the network quickly. So there's some other ideas that we have about how we're going to be able to do that. We might actually have some possible ways where we shard, encrypt, and then we actually FedEx drives around, by the way. So there's lots of interesting ways that we can tackle that problem, and it's something that we're thinking about right now. Okay, so with Host.io, what ended up happening was our developer went back, like I said, 2 days originally, and ultimately turned into a 4-month-long coding sprint. And it took up all of our core devs, and it took up pretty much all of our energy. And what ended up happening was really heroic from our developers' standpoint, because for 2.5 people, they really did the work of about 5 or 6, and it's quality work. I mean, I have to admit, I mean, the first time I plugged in or saw what we were doing with the relayer and saw it working, I was like, how is this working first time out? I mean, it really shouldn't have been, and it was. And so the great news is that they did a great job in putting this whole thing together. And because this module is the core network interaction, this now sets us up for the next 2 to 3 years of coding development and product release and product work. It's something that we now know in hindsight we had to do, that we didn't really know in advance, and so it's now completed, or at least it's in the completion stage where we're doing sort of combing on it and fine-tooth development. So it's really a positive development that we got through that. Some of the things that in the current core development Trello, host operator development is some of that fine-tooth work I was mentioning. Contract formation right now is manual, very much a manual process. So we're writing some modules to do some automatic contract formations. I will just briefly depart here just to say that contracts are going to be different with us than they are in the old project, and that what's likely going to happen is SCP Corp is likely to make master contracts with every single host on the network. And then what happens is that various customers will all share these contracts. And it'll all be an accounting thing that happens underneath on how we actually turn around and access the contracts and permission, various enterprise customers so that they can, upload just the data they paid for and so forth. I think if you're familiar with the blockchain here at all, you can recognize that having a set of master contracts like that spread out for all multiple customers is going to really solve one of the other problems that's going to be big for a lot of blockchain projects down the road, which is scalability, because we're not going to have millions and millions of contracts running around the clock and causing lots of delays on the network. So it's an interesting little diversion, but we think it's ultimately going to pay off big time as we move forward. Right now there are 18 cards in the core development Trello in the to-do side. That's the largest backlog we've had since we've started, and it's really showing that we're now the engines are really cranking up. Okay, so a couple of the things that are still to come are cost logging, that's the billing stuff. Deferred contracts is that tokening process. Just as a real quick aside on what tokening is about, tokening is our thing of saying, well, look, if somebody wants to go out and alter the contract a little bit, say we need to upload more data than what we originally specified, what we paid for on credit card or whatever, instead of locking down the contract, revising the contract, and then sending the contract back out to the blockchain for validation, what happens is that the customer gets a small token to do some data use on the network. And I'll toot our horn a little bit here because we wrote about this in the white paper. Our white paper was derided by the oil and vinegar guy, and ultimately what ended up happening is they went back and redesigned their project to do exactly this kind of stuff. So they have some tokening going on their side as well now. Unfortunately for us, they have like 13 engineers and millions of dollars of funding behind them, so it's taking us a little longer, but I think our implementation is going to turn out to be better. In that light, we do know we want to look at RHP3, which is their new renter host protocol that's in there. There's some things that they've done to speed up SPD on the hosts. We know we're going to have to rewrite SPD at some point for the host software, the provider software. but it might make sense for us to go ahead and use our HP3 in the interim while we get there, just to increase some performance on the way to getting deferred contracts done and some of the other things. Okay, the other big initiative that we had along that way was telemetrics, and telemetrics was talked about in the last quarterly call, but we really hadn't implemented anything. What we did was we did a lot of research. We ultimately settled on a time-based DBMS called Timescale DB, which is actually a new product, a fairly new product. We decided on it for a number of reasons, but one of the biggest is because it works very closely and wraps Postgres underneath. So it's really nice for us because Postgres is in the relayer, and now it's also in the telemetrics database. And what we're really seeing is good performance, and we're seeing the ability to really do some interesting stuff with all the telemetry that we're getting today. Telemetry is going to be such a huge part of this project, that just all the various dashboards that we're going to be making for network operations, for customers, for storage providers, for everybody, and then ultimately all of the telemetry that we're going to be receiving from performance data, for availability data, for all of the stuff to really tell us whether the network's doing what it's supposed to be doing and so forth, and then allowing us to go back and iterate, to tweak and tune and make it better. That's really all coming out of the telemetrics. And so we've already done a couple of things, which I'll show here shortly. This is just a screen that I pulled off of one of our server things. Let me go ahead and move my ugly mug out of the way. This just actually highlights some of our server usage for our little 3-server cluster that we have running right now. But it gives you kind of an idea of what we're doing. We've attached a Grafana front end to the Timescale DB and Postgres backends, and we can pull all kinds of information out of it about our network, about the network, and about storage provider instances, about the blockchain, about pretty much everything that's in the project. So what's come out of this whole process now is that we're in a place where we've got these 2 large initiatives that have now progressed forward very far, to the point where we can now sort of see daylight towards product release and revenue generation. The problem that's really kind of raised its head is that we just don't have enough team. We don't have enough personnel to really get to where we want to get to as quick as we need to get there. But if you're familiar with the project and you've been paying attention, you know that we had I don't want to use the word derisory because it's not. We raised a decent chunk of money, but compared to some other blockchain projects, crypto projects, it wasn't an awful lot of money. And at the end of the day, in some ways, I think that's kind of good, because it's really forced us to kind of work hard with the resources that we have in front of us. But what we've decided to do at this point is, instead of going out and doing the process right now of interviewing, putting up those ads and so forth, doing coding tests, doing all of that sort of stuff, taking 3 to 4 months to bring in some additional core developers. In advance of our secondary capital raise, what we're going to do is we're going to work with contracting agencies. And specifically, we've hooked up with an agency out of the Ukraine, because we found that people over there actually just really are great coders and do a great job. In fact, our senior architect is actually based in the Ukraine. So it's really actually been a very positive situation for us. So we're hopeful that it works for us from a small module type contracting basis. So we've already engaged and interviewed the first senior to come aboard to do that kind of work. We've tasked them to do something we're calling the appliance supervisor module. And if that works out well, and we like the work, and we think we can do a good job working with this individual and these kinds of folks, then we're going to immediately ask for a second candidate to be thrown our way. And we're going to take the person after they finish the appliance supervisor module and move them into core backend infrastructure stuff, the stuff I just talked about, deferred contracts, cost logging, etc. Okay, talking just really briefly about what they did, because I can tell that this call is going to stretch. What we ultimately brought this coder in to do was the storage appliance. Now, we had actually got started on the storage appliance last year. We ran into some snags for various reasons, and then ultimately we decided to sort of bag the process that we were working on. We went back to the drawing board, and what we came up with was sort of an Internet of Things type strategy. So essentially what Jay, our internal IT guy, did is he sat down and he wrote it all up on in a design sketch and essentially said, look, what we really want is something that uses something very similar to the Home Assist technology, something that really can talk to both the hardware and back to our servers and to the web, because essentially the user's got to be able to log in, register, provide information, KYC, do all that sort of stuff. They have to have an interface to be able to see drive health, storage status. They need to be able to see the wallet and all that information. And then ultimately we need to be able to push updates to it, and we need to be able to monitor these modules. So this supervisor module is really this controller entity that does all that. And so it's a little self-contained thing. We think that this senior dev can come in here and using Golang, bang that thing out probably in a couple weeks. And then ultimately we will launch the storage appliance for pre-sale. And I'm hoping that probably sometime at the end of February that we have a launch page up where people can go in and put in pre-orders for the storage appliance and then take it out for actual sales into March. If it works really well, and we think it probably will, then we'll immediately roll it out with an open source repo so people can build their own using that software. And also we'll put together units based on like for you, platform profiles. Okay, let's talk a little bit about the host network. This is another one of those telemetrics pages. This is one that the storage providers have become pretty familiar with and are having a great time reviewing. We've hit some really nice milestones. This is the storage provider network status. This really is the dashboard of our network right now. We have 100 active hosts serving up 1.058 petabytes of capacity, and we've used up about 102 terabytes of that so far with our testing. We're calling the network a test net, even though it really is in production and legitimately we could charge for it. But at the end of the day, we're still developing the relayer and we're not quite ready to sell it to customers, so we're still calling the network test net. In fact, I will say something maybe perhaps a little controversial. There might even come a point at some point down the road where we lead up to product release where we come to a decision that we tell all providers to go ahead and wipe their drives and start completely over from scratch just to ensure that everybody gets the maximum amount of customer data going forward. That's not clear yet that's what we're going to do. So, especially to the team sometimes I just say things that the team maybe has not fully heard yet. So don't freak out, Jay, I guess is the question I'm saying there. But that's something that may happen going forward. Okay, talking a little more about the host network. This is the incentives that we paid for Q4. Everybody knows this, and I'm just going to say it outright again. We're way overpaying for the network right now. We're doing it purposely to build the network. We're paying something like $9 a terabyte right now. So there's just no reason not to be hosting storage on our network right now because we're paying a lot of money for people to essentially stand up these hosts. And it's a great way to earn some SCB coins if that's what you're interested in. And it's a great way to learn about hosting on our network because right now the stakes are not all that high except for that $9 a terabyte. So, this is what we paid out for the quarter. And I suspect that Q1 will continue to look similar to this. It'll probably start to taper a little bit and it'll taper more in March than it does, in January. By the time we get to spring, these numbers will start to decline to a place where they look more like, like the other project, maybe not quite as lean and bare bones as the other project because we expect to make storage providers profitable. Okay, this is that dashboard that we created for that. This is actually new to everybody, and what this actually shows is a process that currently right now is very rough and rugged. Right now what ends up happening is I have this gorilla spreadsheet that I work through, and I dread the first of the month now because I have to go through and do all this manual work and then ultimately work through some formulas and then ultimately set up a batch file and send out all these payments to all of the providers on the network. It's possible right now because there's only 100 providers, but if we were at scale, this would be a nightmare. What this page does is this sets us up to automate the whole process. and it starts changing the process for storage providers. Storage providers were initially awarded primarily on capacity and standing up an instance. And those two things right now are really starting to fade into the background. And so what we're going to focus on now is uptime, use storage, and free capacity, the availability of storage that can be used on the network. And we look at all of those. We still have some adherence to guideline payouts, but those are the things that ultimately will get you paid above and beyond standard rent on the network. So uptime is really key. Keeping a lot of storage available and accessible is very much going to be a huge key, and those are going to be the two primary things. Now, and that's probably over the first, period of time. But remember, our whole thing is that we're going to be going out there and selling storage to customers. And so when we sell storage to a customer, let's say a customer has locations in London, Boston, and Tokyo, and it turns out that we've got storage providers around Europe and around New England, but we don't have any in Japan. So what we do is we go over and we keyword add a bunch of those storage appliances, and then what we do is we subsidize the heck out of the appliance through an affiliate model, and ultimately we make it so that it's almost, impossible for people not to want to buy and stand up these units in Tokyo. So ultimately the customer can have 100 to 200 local units to choose from for a very fast performance footprint. What we anticipate happening is over the course of the next 2 years, we'll see the areas where we generate customer business really balloon and flower out with a lot of hosting. And then the areas that are Spartan or sparse over the next, period of time will then ultimately get extra incentives as we turn around and try and convince people to take, units, stand up provider units in those regions. Our goal, our biggest thing is, look, I've said this before and I'll say it again. The real key to all this stuff is not all the whiz-bang software, client software. It's not all the permissionless technology. It's not all the science fair crap. It's just not. Everybody's going to end up having the same capabilities in about another year and a half. Everybody's going to have the same access to the same tools. What matters is building a network. What matters is growing out a large data center. And that's what we're really building and setting up ourselves to be able to accomplish. And that's what incentives do for us. That's what the incentive wallets that we have actually do for us. Okay, I got to run by these slides because it turns out that my first guest has not shown up, and so I will go ahead and flip right past those. And who knows, if he shows up before the end of the presentation, we'll bring him in. If not, we'll just move past. Okay, so let's talk a little bit about consensus, the block. Right now, we're at a place where coins mined per block going out to the miners are 162.84 per block, which equates out to about 23,450 per day. Just to give you sort of a comparison, when we started the project at the beginning, that number was about 34,000 per day. So that kind of gives you an idea of where we are in the emission schedule and what's still to come and so forth. Today, it's pretty interesting because for the first 2 years, the project got a subsidy out of every block, but about 3 months ago, that changed, and all of those coins now that would have gone to a development subsidy are now going to a burn address. So there's actually a deflationary measure here that's taking coins off the table, and it's literally 18 coins per block. So we're not talking about nothing. We're talking about a significant chunk of coins every single block that are being sent off to a burn address to limit inflation on the project. So it's really powerful. I think somebody in the project mentioned to me that it's somewhat ironic that we're in the process of stopping a development fee and quitting that process just while another project is actually spinning up a development fee. And I'm sorry, I probably shouldn't go on any further on that. Hash rate's about 2.23, network hash rate about 3 petahash, a little bit below where it's been. But one of the things I'll tell you that we did see happen again, and I mentioned this at the beginning, is that we did have a hard fork. And in that hard fork, one of the things that came clear was we've always had this unknown pool on our network since about September of 2019, I guess. It's the difference between that 223 and the 30. This unknown pool has spun up and down various numbers of miners over the period of time. To a point at one point where they were just over 50% of the hash rate when hash rate had gotten really low. But at the end of the day, we didn't know who they were, and we had no way of finding out who they were. We assumed they were China, but there was just no way for us to find out. Well, when the hard fork came along and the person running this pool apparently doesn't pay attention to our Discord or any of that sort of stuff, so they didn't get the memo that there was a hard fork, they didn't upgrade, and they chain split us. And when they chain split us, ultimately that caused them to go off and be mining a legacy chain. I don't know, perhaps they could have just went off and started SC Prime Classic, but ultimately the guy came clean. He showed up in the Discord. He admitted to being the pool owner, and it's been okay chatting with him. They're not really supportive of the project. They're in this for one thing and one thing only. They mine our coin. They sell all the coins immediately. They're just trying to get slivers of Bitcoin. Mining's a selfish pursuit. That's what happens, and in this case, that's the deal. You can see that hash rate got really high at the end of the year, and then it started to drop off a little bit. It'll be interesting to see what happens here in another 3 months when rainy season starts again, or 4 months in China, to see if hash rate picks up or drops off. Last summer, or last year actually, it had kind of dropped down, but I think we're kind of at that point in the project now with the price and everything that hash rate's probably going to stay at this level. Okay, we're going to talk about the corporation a little bit, and I'm going to bring in a guest, and it looks to me like this guest is actually here, so I'm grateful for that. The deal is that we, as I said, scored a small capital raise in 2020. And that amount was originally targeted to be around $600,000 if we fully subscribed it. And what ended up happening was we did fully subscribe it, and then we did get these 3 additionals that I talked about. And we were forced to actually go into pocket and pull out a couple extra shares for them, which was great because we actually needed the funds, and this is part of what we're using to generate some of those new core developers on the contract. Right now, our cash burn has been about 30% of the total capital raise. So we've been running at roughly 25K per month. That's not really a good number, though, because it stretches back. We started the capital raise all the way back in 2019. So there were some months where we really spent very little, but then there were some months where we spent a lot on legal fees and stuff like that. So all told, over the period of time that we've had funds coming into the project, it's been about 25K per month. And if we stay there, we could go quite a bit further, but it would take us a while to get to product release. So hiring all these contractors is probably going to kick that number up, I'm guessing, to 35,000, 40,000 per month, and probably get us into a place where we run out of cash sometime in late summer. But we'll see how we end up when we get there. We believe we have enough runway as it is to get to a complete product release, but as I said, we're going to run out of cash right at product release, and we really don't have much budget at all earmarked for marketing and sales. So that's a real issue. And fortunately, we have some ideas on how to get some business without that, but we know we're going to have to spend significant money to market and sell this product. Okay, let me bring in our guest and introduce him. My little slide here is being cut off, but I'm not going to screw around with it right now. Let me actually, things like this bother me, so give me 2 seconds because I can fix that. See, I can fix that. Okay, our guest today is actually, he's a multi-purpose guest, and we'll take advantage of his knowledge and information in all of his areas. But Charles Hausman joins us today. Primarily, I brought him in to talk a little bit about being a stakeholder in the project. He is an investor in the project. But it turns out, and actually this is the case for several of our stakeholders, he's also a storage provider on the network. He's planning to become a miner on the blockchain at some point. I'm kind of discourage him from that because ASICs suck. But at the end of the day, he wants to mine coins to build a bag, and that's a good way to do it. That's probably one of the best ways to do it. Being a storage miner will ultimately become that. But hi, Charles, how you doing?
You.
I'm sorry, I have to turn your audio back up. Go ahead.
Can you hear me now?
I'm going to ask the audience. He's live in audio. Can you hear him? I believe he's out there, but I want to make sure. Somebody
Can you
can
hear
post
me?
in chat. Yep, you can. They can hear you. Okay,
Okay.
I'm gonna have to do something here real quick. Okay, there we go. Okay, so I put up a little slide here describing your background, basically from your bio. And the really interesting thing about Charles is we have what I kind of describe as a bifurcated investor structure. We've got a bunch of investors who really don't have a lot of technology background. They're just primarily like real estate guys and things like that. But then we also have a number of really good investors who have data center background, and Charles is one of those. He actually co-founded with another one of our investors, Eric Kagan, a data center and had a successful exit. And so he's been really helpful in providing a lot of information. We'll talk a little bit about that. Why don't you go ahead and tell us a little bit about yourself, Charles, and talk about your experience.
Yeah, no problem. Happy to be here, Ken. As Ken said, I've been in the technology space for probably 25 years, mostly focused on infrastructure and, obviously now it's cloud infrastructure, but back in the day it was data centers, communication lines, and I co-founded one of the first and largest online backup companies in New England in the early 2000s when people were happily paying $50 a gig to transfer data off site. So you can see how the metrics have changed over the years, but what that's allowed me to do is been in the space, understanding the back end of this. So servers, data centers, technology, all of that expense and how to orchestrate a company that was managing about a petabyte of data for over 10,000 customers around the world. We had data centers in the US, we had data centers outside the US. I had data centers with Eric that you mentioned. And, we really had a lot going on running a 24/7 service. We took in VC money there and we ended up selling it to a VC firm late in the 2000s. And I transferred to another company where I spent a lot of time and a lot of focus. I serve as the CIO there and we do a lot of cloud. So that's your Oracle OCI, your AWS, and your Azure. So I spent the last probably 7 or 8 years focusing on cloud deployments, cloud connectivity, cloud storage, cloud security, things like that. So when I ran into this opportunity from Eric, it made a ton of sense because we're looking for that storage and our customers are looking for that type of storage all the time, and everyone is getting sick of getting nickel and dimed at AWS. So I was immediately excited about it and wanted to understand as much as I could, and I spent time with Ken and we've kind of snowballed from there, a couple months in a row now. So happy to be on the project, happy to be involved in the project, and looking to add as much value as I can here.
Great, good information. The other thing I want to sort of say is that we've actually extended that because that experience and background has really allowed us to do something that I think has been kind of valuable because we didn't really know what we were going to have with the relayer and the host IO and everything. But you're actually beta testing right now. Is that correct?
Yes, absolutely. I've been putting it through its paces the last week or so, and I'm happy to say, and I think it's performed great. The transfer, and I'm transferring right now on cable modem with limited upspeed, and I'm transferring gigs of data in very small amount of time with throughputs that are north of 150 megabytes. I even hit 200 megabytes last night, which is amazing. Getting data off some servers in my house. I'm going to do some additional testing this weekend from another data center with bigger pipes. But the bottom line is the product's worked out of the chute, no problem at all. And I'm using Veeam. I know you guys are testing with Commvault. I have Veeam up and running. So, those are two of the largest packages on the planet that everybody has. And being able to, I'll use the word seamlessly because it has been. I used a link, a username and a password, and I was able to start backing up to the network instantly. So, hats off to you guys. You've gotten something working real quick here that from someone who hasn't been involved in the project and been around for the last 2 years, I was up and running with Jay's help in 5 minutes. we were backing up data to the network. So I can't tell you from an enterprise space how easy that was. It was seamless. It was like I was dealing with Amazon. So very straightforward. Congrats on that. And I'm looking forward to do as much testing as we can. We've done some restores already. We're going to do some more restores tonight. And so far, performance is way better than I thought it was going to be, and certainly better than what you're getting at Amazon and some of the more off-site, the Glacier products, some of the stuff that's down in the price range that we're going to be coming out at. Um, you know, much better performance. So hats off, Ken. Great job so far.
Yeah, I appreciate that. And the really interesting thing is that we were really going for a URL swap, right? In other words, when somebody decides they want to use our network, we don't want to have to onboard them through a complicated process of teaching them anything. We simply want them to go into the tool that they're used to using, swap out whatever URL they're currently using for, Azure, AWS, whatever they're using with our thing, and go forward with no changes at all. And the great thing about that is, you know, we can piggyback on VM, Rubrik, Commvault's marketing efforts, and so essentially what ends up happening if we partner with those folks, we end up getting in those drop-down menus, and we can generate customers without really having to do that real heavy duty, wasabi level effort, where they generated like $59 million worth of funding so that they could go out and
Yeah,
slather the
it'll
market.
certainly help. The cost of customer acquisition will be very low if we can get listed in those partner programs and just be an option there, and then use our marketing efforts to grassroot it into a great situation. The good thing is though, the contacts that I have in the industry and the people I've been talking about it already, everybody's on board to save money. So even performance a little aside, this is for the most part secondary storage. So people need that location. They want it off site. They don't want to pay Iron Mountain. They don't want to be moving tapes around. You can't unhook disk arrays and ship them out. It's a pain to do. So having something that's in this lower cost tier, that's not on the Amazon level of pricing, and most importantly, the nickel and diming that goes on in Amazon that led us to get out of Amazon and over to Oracle for the most part, it's going to be huge. The product will sell itself with the right push.
Well, that's really great to hear. That's really good. So it turns out that when you actually set up your host, that experience was not quite as clean. Can you talk a little bit about your experience in standing up a provider on the network?
It was the first go around was easy, and I didn't know what I didn't know. So I was working with Eric on it, and I'm like, it's up. It says it's up, and Eric couldn't see it for a day. But what we found out is it was just zeroing out the drive on the USB side, and luckily this time it was a small drive, so it did it overnight, maybe 24 hours, and it was up and running. I'm like, okay, great, we're live again. I didn't do anything, but it's working now. And then as I started to add more storage to that, I dug out a few more USB drives that I had and added more storage. That first one might have been 2 terabytes. And I think I added like 15 more terabytes. And that's when that zeroing out process took my rig down for about a week. And I didn't know why until we started, working with your team, figuring it out, and then turned on compression, basically pulled it off, redid it, added compression on, and then the downtime was minimal. It fired up the drive, wrote out that file in seconds, and it's been up and running since. So it was a good learning process for me to understand what your product was doing and how it was doing it. And a little compression works magic, right?
Yeah, and ultimately, do you think that this enthusiast host sort of class is probably not where we're going to want to put our focus in something like a storage appliance or a 4U
Yeah,
that's unmanaged?
yeah, we're definitely going to want to move to the appliance. I mean, I'm a little bit of an anomaly. I've got multiple cable connections in my house. I host some equipment already for different things. So I had the infrastructure to mess around with it and do stuff and understand what I was doing. Where I think the average person who wants to get involved in the business, get involved in the network, and generate revenue will need to have it as easy as take it out of the box, plug it into the network, and turn it on, and have it, minimal configuration, and have it just self-police itself. I think will go a long way to build, a large amount of nodes as fast as possible.
Do you think customers potentially might become good providers back to the network as well? And is there an
100%.
opportunity there?
Yeah, everybody has storage, and the people that we're targeting in that above SMB space, right? We're going for larger into the mid and enterprise, everybody has data centers, everyone has pipes, everybody has extras. So, being able to plug in, whether it's the 4 drive unit or a 4U unit to start generating traffic, I think could be a very easy sell and give us a lot of, call it, higher power locations with, more consistency, ping pipe and power to have that higher tier of access that we've been talking about for those people that want to pay for it. I think that's a home run.
The other thing that we're really trying to focus on, and we've said it, but we haven't really committed to it yet because we don't know. But what kind of value does flat rate pricing bring to this? If we're able to say to a customer, this is the cost, and at the end of the month, our billing department isn't going to blow your CFO out of their socks.
It's huge. I mean, it's huge for to understanding what the per terabyte pricing is. And one of the things we did with the backup company that was very successful is we sold package pricing. We said, hey, we looked at your data, we looked at what you're doing, and we're going to give you a consistent price. Say it's 250 gigs, say it's 100 gig, and we gave them that expected bill so that it wasn't one of those things where the bill was doing this every month and bouncing up and down, and people are wondering why the price is changing. We gave them that consistency, and I think that one of the things you and I talked about is the more consistent the bill is, the more silent it is, the more it doesn't move around, the less eyes it gets because it matches a number that they're expecting, and it's just going to get stamped and paid. So, having that idea or that consistency, whether it's a package price or something like that, I think will go a long way as we get into the larger business units that are just want to write a PO and have it equal what the price is and have it be done and paid.
And the other thing that we obviously are looking to do is to allow them to pay the same way that they pay all along, PO, credit card, whatever. Some of the other projects in our space believe that these companies will acquire cryptocurrencies and dole those out to storage users in their enterprise and somehow make that accounting work. Do you see these people wanting to engage with cryptocurrencies?
100% incorrect. No possible way. Running a business that has any size to it, the last thing you need is things that are not part of everything else as far as how you pay bills and how you integrate. There's no way they're going to be chasing cryptocurrency. There's no way they're going to be tracking it. It's not built into the ERP systems they use. Absolutely not. They're going to pay with a credit card, and that's going to be that. They may do a PO. They may want to write a check. But like for me, when I make purchases, unless it's real big, I can just give you an Amex card and be done with it. You hit the Amex card, and I'm off and running. So no, I don't think they're going to get into cryptocurrency. I don't think they're going to get into distributing it and trying to push it around the business because it takes away from the business. And the last thing someone running a business wants is other side things that don't generate them the right kind of revenue and things like that. So I think the larger companies we get into, the more stability we're going to have, and it's going to be a credit card or a PO, and that's it. And I think package pricing is going to round us out, have a predictable number, and if people go above that, they go to the next package. It's easily explainable. The bill goes up, and we move on, and it doesn't change for another 12 months.
In truth, I think what's going to end up happening in those sales calls, the crypto's never going to come up because the crypto really is a tool to use between us and the data center, the storage providers. And it's
That's
how
right.
we pay them, in 59 or 259 countries and 59 different currencies, whatever. Um, but there's really never a need for the actual storage customers to even know there's a crypto underneath.
100% correct. I couldn't agree with you more. And honestly, someone in my position, I don't even think we need to get into the word storage miner. We get into nodes. It's a storage node. We have storage nodes sprayed around the world, and we can put you on all the storage nodes we have. We can put you on minimal storage nodes, and we use a generic term like a storage node. We don't need to get into the whole over explaining it with crypto. And honestly, that might scare people off if you get higher up in the enterprise, because that obviously crypto has various connotations to it that people might misunderstand. And all we have to talk about is we have a network of storage nodes, and we can put you on low cost is on all the nodes we select, and premium is the nodes that we can help you select and geocode them and off and go. I honestly don't think it needs to get any more complicated than that in the sales process.
Great. I really appreciate you coming on the call today, and I really appreciate the work you're doing right now with the beta testing. I know that's stretching deep into the evenings, and you're working with
Happy
Jay
to
in New
help.
Zealand, so that's been really fun to watch.
Nope, happy to help, Ken. I'm here to help, and we'll get it moving. And like I said, at the end of the day, we can sell this product with a good PowerPoint, and that's it. That's all you need.
That's great to hear. Okay, thank you. Appreciate you coming on today. Okay, I'm going to move forward and go pretty rapidly. And I do just want to mention to everybody that in the questions in the chat, there are a couple of questions that I'll try and answer before the end. Some of them I have to be a little vague on, but some of them I can answer, and I'll do that before we get to the end. But I need to rush through the next few slides because we still have a fair number to get through. So I want to talk a little bit about some of the things that are outstanding. So product marketing and project marketing. Product marketing hasn't begun yet, doesn't begin really until sometime probably in March, leading up to actual product release. We did announce the EXA name, and we did put up a pre-launch site, but we really haven't touched it since we did that, and that won't happen probably for another 60 to 90 days. What we're doing right now is project marketing to bring awareness to the project, to bring in new storage providers, to bring in new miners, to bring in new community members. And to accommodate that, the first thing that we've started is a campaign called Evolution Then Revolution. And I'll cover just what that means because we're really behind this idea. This idea is that we're not trying to change the world. We're trying to build something using change technologies to adapt to current customer needs. And that's what we just talked about with Charles. And so that's the whole evolution then revolution. Let them pay with their own typical kinds of payment processes, credit card, PO, etc. Don't make them hold cryptocurrencies. Don't get into all of those kinds of things that are different. Give them a URL that just they can swap out in the software they're currently using. Don't make them use some weird, bizarre interface. People in crypto tend to make the worst UXs. So at the end of the day, we call that evolution then revolution. And what that's led to is 3 different graphics that we're putting out in social media in different places to sort of highlight that process when we're talking about that. The first one is sort of near and dear. It's our ape man evolution Lego revolution. I hope I pronounced that right, but I'm sure if I didn't, I'll be told. But our ape man actually is out there really selling that idea strong. We just released the second leg of the campaign, which is the Banksy tied to the evolution chart. People ask, well, do you have some trademark problems there with Banksy? Well, not really, because he lost a trademark case with that exact image because he's unwilling to identify himself to the world. Now, we're not really using it to sell anything here. What we're using it to do is just bring awareness to the project. So at the end of the day, again, evolution, then revolution. And then the last one might be a little unknown to people around the world. That's the Ron Paul love revolution, or love evolution in our case, sign, and then that will be the third graphic that goes out there. This campaign is going to run for about another 2 months into the actual formal product marketing. We haven't done enough yet with this campaign like we want to do, but what we want to do with the campaign is we want to give away free t-shirts to new storage providers. We want to give away some gear to various people for doing things to help the project. So look for that to crank up over the next 30 days because the time is right and we're starting to get that presence out there. I want to talk a little bit about the SCP Street team. It's a fledgling team at present, but what we're really trying to do is we're trying to grow this group of people that are out there really talking about the project and really kind of trying to increase awareness. It's no secret that we really don't have a very large community. Part of that is just because of where we started in the bear cycle. Part of it is just because we forked from another project, and part of it's just because it's just really kind of hard to grow a community from scratch. And so we have, a couple thousand people that are pretty dedicated to the project, but at the end of the day, we don't have those big numbers, some of the crypto projects bring. We do have a couple of people, though, that are out there on a very strong daily basis, and they really need your help. So if you want to be involved in the project, if maybe you're doing storage right now, but you want to know how you can help it go further, farther, faster, you can follow these guys' examples. These are 2 people in our community, Extra Bull and Gord. Gord is actually our community manager, but they are both out there with Twitter accounts and Facebook accounts and so forth, and they're talking to other people that are not involved in the project. That's the key. It's not that they're just tweeting, because neither of them have very large Twitter followings. What they're doing is they're going out there and they're tagging other people. And that's, gambling. That's high stakes. It's risky because you risk getting told to go, screw yourself, or to do something else. But at the end of the day, I got to take my hat off. These guys are just doing yeoman's work on this stuff, and they really need your help to join the street team. And if you do join the street team, we're going to find some gear. We're going to get you some shirts. We're going to get you some stuff. So please get out there and help these guys. They will show you how, and they will give you the information you need to get going. We've had challenges with this whole idea that I broached last time about how our incentives are fully aligned and how a lot of projects they aren't. One of the challenges is when you have all of your incentives aligned, where everything sort of depends on everything else. If you don't have a large community, what ends up happening, you don't have a lot of trading volume, and ultimately your coin price doesn't go up, then you end up running into problems, because if your incentives are all aligned, then that means everything suffers, because one thing suffers. You're only as strong as your weakest link. And look, hands down, and I say it all the time, our weakest link is our coin price. And our coin price is weak because we have a small community. And, everybody who's been involved for 2 years or so has the bag that they're probably going to want to have. And so buying more coins or mining more coins or hosting to get more coins is not necessarily a beneficial thing for them. So I do want to say that that's really important to understand, that if a higher coin price does show up for us, what ends up happening is the project cold wallets allow us to pay less out in terms of number of coins to pay out the big incentives. We can grow a bigger network faster. It makes these SPF more valuable. These SPF ultimately are going to lead to a secondary cap raise, which I'm going to talk about here in the next slide. But at the end of the day, it's all interrelated because the incentives are all aligned. I will just say it clearly. We don't require a higher SCP price. We don't require any SCP price. At the end of the day, if our price goes to zero, we're still going to have a successful product, and we'll still build a successful network. But a higher SCP price allows us to build out a network to compete with a project like Filecoin or a project like Tardigrade. If we get a decent, reasonable coin price, and remember, our project right now is currently being valued by the world at something like 2% of SIA. We have 50% of their storage network. We have a better product, in my view, in terms of how much revenue it can generate. And we have something that's closer to launch than they do. Skynet probably will be a useful and interesting technology down the road, but it's probably 2 years away from being to a point where it actually has any significant matter to it. We're probably 6 months away from taking on real business. So why our project is somehow valued at less than 2% of that project is really an amazing surprise to me. I don't understand it, but I'm hoping that through marketing and through getting the word out there and people find out about us, that we can improve that situation, because it does really help the project. These are the charts showing what's happened. Essentially, on a USD basis, our coin versus the dollar, we've gone up, but of course, that's mainly because Bitcoin has gone up in price. And you can see that in this next slide, what actually happened. We actually were on a good tear. In the summer of last year, our coin was really going up in value, and things were working out, looking to be very much in line with the way they needed to go. And then things just fell off the table. For a lot of reasons, people stopped buying our coin, and Bitcoin started taking off, and that exacerbated it. And then we ended up in this long flat period, and who knows where we're headed from here. But I'm hoping to see these charts sort of turn a corner for us. This is why that number is really important. We have these cold wallets. You can fault us for it. People in crypto don't like pre-mines. This happened. This pre-mine exists. It was originally intended to be an airdrop to SIA holders. Fortunately, it didn't happen, by the way. If I had it to do over again, we wouldn't do an airdrop at all to those folks, because it hasn't helped us at all. And so in the end, what we ended up doing is we took the wallets that were held by Binance, Bittrex, Poloniex, all of the various exchanges who hold the majority of SIA coins. So when we airdropped, we didn't send the coins to those exchanges because the exchanges all said to us, no, we're not going to distribute the coins to the customers. So at the end of the day, we went ahead and we put them into cold wallets. They haven't moved since. We have since decided that these coins will all be used to grow the network. So what does that mean? That means that storage appliance or some 4U rack that we develop, let's say we take a storage appliance and we drop in something like four 18 terabyte drives, and then the unit ends up costing something like, 2,800 bucks out the door. Well, talking to somebody about buying one of those appliances for 2,800 bucks, then you got to start looking at it and saying, well, what's the ROI on it? How many months is it going to take before I get my money back? And it might take 2 years, right? It might take longer with the coin price the way it is. And so what ends up happening is with a higher SCP price, it ROI comes quicker on those units. And then the second thing that we can do is we can take these cold wallets and we can slap a whole bunch of coins in the unit. So if the unit's $2,800, maybe we subsidize the unit for, $1,000 and give them $1,000 worth of crypto if they keep the unit online for a certain period of time. So they're only ending up paying 1,800 bucks for 2,800 bucks worth of costed hardware. So you can start to see really clearly how this incentives alignment works. Okay, I want to rush through this real quick. I want to talk a little bit about the SPFs because these are a token that a lot of people don't know too much about, but we made a final change to them, and we think it's really going to be a powerful thing for us going forward. So what ended up happening was we have this secondary token. It's a network equity token. Essentially what happens is this token takes a tax off the network, off every transaction that goes on the network, and will do so into perpetuity. And so what happens with these tokens is we originally started out and we had this weird small number of them. 10,000 for us, and I think we airdropped 10,000 to the original project, and it didn't really make a lot of sense because the value of them go into a really weird place. You can't really trade them anywhere. All the trades that take place are OTC. They are an equity. They're clearly an equity. So what ends up happening is the project can't legitimately go out there and sell them under just, calling it an internet public offering or something stupid like that. So we've never sold any of these things. We definitely have given some away free, and we've given them away to various stakeholders and people in the project, but we've always said to them, they have no value. They're not worth anything at this point. You have no place to sell them. You can sell them OTC, but what you're going to get for them is unknown, unclear. To us, they have no value at this point. But what we did with this hard fork is we turned them from 30,000 to 200 million. And by turning them to 200 million, we also dropped the tax from 15 to 10%. And what that reflects is we essentially forked off the original 10,000 that belonged to the other project. Because look, they didn't honor their side of the deal, and they really didn't, do anything to sort of cause us to want to continue to do that. They still have their units, by the way. Their units just got diluted out. They have units, but their units are not, large in commensuration to the actual emission. What 200 million allows us to do is to put these things on an exchange at some point down the line and have them sell at a normal crypto type price. And what we can do is find a way to work under a various SEC type exemption. Right now Reg CF is the easy one, which is being raised to 5 million bucks. That's a possibility. A second possibility is to work with a VC, a crypto VC, or a group of crypto VCs and do a token back sale, something like Filecoin did with the SAFT, a contract for a future delivery of a token. And then that way allow us to do something like get the units put onto Binance. If we do end up going that direction, which I think would be really phenomenal and really be a cool thing, we could generate a fairly significant capital raise mid-year, right about the time when we need it, without having to really dilute anybody in the project and without having to really go out and give up a lot of control, because we give these VCs this token instead of giving them equity in the corporation. So it's something that's really important. But again, the value of these tokens are directly predicated on the value of SCP coins, because when you own an SPF, it throws off SCP. And so the value of SCP becomes important to the value of SPF. I'm fearful that because they sold the SCP token off so badly, that as people start to realize what the deal is here, that they will sell these SPF tokens off really badly, and that they will become 2% of the other project or whatever. So we're really working hard right now to set this up in a way so that ultimately these things go out with the value that they should have. This represents equity in a scaled cloud network for enterprise. And look, it's only going to take one or two potential early customers to show that we have a working product and we have the ability to scale. So I think anybody that's selling any of our tokens right now for really the current valuations, at some point in the not too distant future, are going to look back in hindsight and wonder why they did that. This is how the tokens are currently split up. There are 200 million tokens out there. The founders and the team, me, all of our guys on our team, we have 2.25% of these units. A contrast with the other project, by the way, which I think it's something like 60 or whatever. I don't know. But community developers got some of these coins. There was no quid pro quo. We didn't like give people, you know, these tokens for doing work. We said, look, if you do some work, you know, these tokens might be made available, but look, they're not tied to the work. If you do the work, great. If you don't do the work, great, whatever. Nebulous airdrops do account for some small percentage, 0.76. The angel investors got the big chunk so far, and those folks are holding on to these units and, you know, are hopeful that ultimately we can find a solution to get them onto the market in a token-backed sale. And then the corporation currently holds a little over 77% of these units. Okay, that was a long one, an hour and 23 minutes, maybe a little less than that. I'm going to go ahead and look through the chat real quickly to see about some questions, to see if there's things I can answer. Let me scroll up so I can work through them. When is product going to be released? Look, I've really kind of got into a place now where I'm skittish about talking about timeframes. And I know that's really not a good way to be. Everybody in crypto gets there because it's just really difficult to know how this stuff goes. We had a roadmap. Host.io blew it out of the water. Our original intention was that we would do some form of a quote-unquote launch in January. I'm guessing right now, because all of the remaining work has to do with billing and infrastructure around billing and customer relationship stuff like AIM, or we could probably go out and find some open source stuff to work off of as templates, that saying that we have a formal product release late spring, summer, early summer, or summer time frame makes a lot of sense. Even if we just get to a place where it's still pretty manual in how we take credit cards and how we do the billing and so forth, as long as we're doing correct accounting on the actual storage use, I think we can actually start selling the product to customers. I think there are definitely going to be some evangelist customers that are going to be willing to take the product in a less than complete final version. So that, I think, is very clearly possible by late spring, early summer. We have released what we call MVP, which is essentially allowing the product to show that it works, and bringing in some beta testers who are actually uploading and downloading real data and could use the product today to actually store real data and real backups on. So, okay, let me scroll down here a little bit. Can't really answer at launch how many users the network will be able to handle. I mean, the amount of users is not really a metric that we've had a chance yet to really do anything with, and that question actually cuts to a couple of different points. When you say users, you could be meaning two different things. So we might sell 3 storage contracts to 3 different corporations, and then so that's 3 relayers that are then interacting with the network. But 3 customers like that could ultimately translate to 30,000 users, right? Because each individual SME might end up having 10,000 seats or better. So we've not yet, obviously had the ability to do that kind of testing. Now, what will end up happening as we get past the beta testing process is we'll start to engage something like Chaos Monkey, or we'll probably end up having to build our own ant farm technology around it to build our own Chaos Monkey. But essentially, what we'll end up doing is we'll build 10,000 fake seats to access the network at the same time. I'm really confident that the relayer can scale to that, though. That's really the benefit of us doing what we did with Host.io. I'm really confident that it's going to scale well. Now, that doesn't mean that a single server instance relayer running one instance of Postgres and one Host.io and maybe, 16 gigs of memory are going to be able to handle 10,000 seats. No, I mean, certainly not. And what will end up happening is, for bigger enterprises that come aboard with lots of seats, we'll have to devise strategies to do clustered relayers, or we'll have to have, strategies to have multiple relayers scattered around different parts of the globe so that, different seats, different locations are accessing perhaps even secondary relayers and third relayers and fourth relayers. So there's a lot of ways to skin the cat because of the way we've built this distributed data center. And we're looking forward to seeing exactly how many it can handle, because right now I don't know. We do know we have a petabyte of storage capacity, so there is kind of a hard limit of how much we can upload right now, but beyond that, that's about all we know. As far as storing in any specific country, yeah, absolutely. I mean, that's the whole telemetrics thing. We know that there's going to be a ton of compliance work that we're going to have to do, and we're going to be able to easily set up host sets where we can say to people, this is the contract set you need if you're in Europe, and you have to stay focused within this set of geographical borders, regions, and so forth. There's going to be, compliance regimes for things like medical data that have to rely on only storage providers that have gone, a lot further in doing things like KYC, doxing, providing a level of auditing software on their computers so that we know that the software is not being tampered with and that the data is very clear. So yeah, there's going to be very, very natural and very easy ways for us to segment off the network, tiered for both performance as well as being tiered for geolocation and all of those kinds of things. Okay, let's see. I'm a minor. Will I somehow be able to invest? Well, at this point, you won't be able to invest in the corporation equity. That's done. You can probably participate in the token sale when it comes out, but there's really not been any kind of pre-sale, and there really won't be. If there's a pre-sale, I think the only thing you can call a pre-sale will be if we deal with a crypto VC who gives us a big chunk of money to do that kind of a thing. Now, having said that, that may be you, right? Because one of the things that we see in this industry is, and I'm just still flabbergasted by this guy. I was turned on to a young man who's, I think, 15 years old today. He got his first Bitcoin when he was 7. He got a lot of Bitcoins when he was 7. And ultimately, he's worth crazy money now, right? I mean, he's a VC, and he's 15. and he's invested in several successful projects, and he's a sharp guy, and he's done a great job. That's somebody we want to talk to, right? I mean, that's somebody who will be one of those logos that ends up on our webpage when we do that token sale. So if you're somebody who has a number of Bitcoins and is able to invest in that kind of fashion, then you need to contact me directly after the presentation, and let's talk. Let's just talk, and I can give you some feedback about what we're trying to achieve. Okay, if you're just looking to buy coins, that's very easy to do. You can go out on the exchanges as noted in the thing, and you can acquire them. Unfortunately, we're in a really weird situation on the exchanges, though, and that there's a very limited number of coins that are available for sale. And when people start finding about the project, we're going to end up probably having a bit of a liquidity crisis because there's less than 1 million coins out on the exchanges right now for sale. Okay. Actually, all 3 exchanges, by the way, can be accessed in the US as long as you do less than 2 Bitcoins. You don't have to really verify. You can just actually, as long as you stay under those links. But anyway. Okay, that's the questions. If there are any other questions, post them now. Otherwise, we'll go ahead and call this one a wrap. And I'm really grateful to everybody tuning in. Uh, these tend to be fairly loosely structured. I do the same stuff every time. The next call that we do going forward is probably going to start to get a little more corporate. It's going to be a little bit more relevant in terms of some of the accounting that I show and some of the things like we showed with the breakdown of the SPF tokens. We're going to start to show a little bit more of the flows and so forth, because we're going to start probably paying out of the cold wallets pretty soon. So there will be some additional stuff that happens in future quarterly presentations that isn't currently involved. If there's anything that's not been covered that you think is relevant and would like to see in future calls, definitely leave a comment in the comment box or join our Discord. Discord is where everything happens for us, so you should join that anyway. Otherwise, I've been really grateful to have all of you folks here to listen to the call today. Thanks a lot for being supporters of the project. Thanks a lot for sticking with us this whole time. We've got some really exciting stuff happening right now. It's starting to crank up. I think over the next 3 months, you're going to just see some really fascinating work from us, and it's going to blow everybody's socks off when we hit the street with a real product. And I'm just grateful to everybody in our community for being here. So thanks for being here, and have a great day and a good day.